All right, July will be a busy month for financial earnings, and according to Jefferies and Company, there's money to be made from that in the options market. Analyst Scott Becker says the earnings will drive up the volatility of financial stocks, boosting the value of the options contracts themselves. Bloomberg's Jeff Kearns is here to tell us what Becker is recommending. And let's just make it clear, first of all, at least if I read your story right, which you can check out, by the way, on Bloomberg.com, that this doesn't really help you in predicting, or you're not trying to predict one direction or the other for the underlying shares, but actually the value of the options contracts themselves will be worth more.
You got it. That's it. And so when you buy an option, the more that the underlying index or security is wiggling around, the more you're going to get, the more the options are going to be worth.
Wiggling.
And so wiggling, yes. And so when you have a lot of events and catalysts coming up in a set period, like we do next month, then options strategists like the guys at Jefferies who wrote this note today, they are looking at the calendar and they're seeing that there's a lot of earnings coming up in this period between when the June contracts go out, they expire at the end of next week, and then when July's due. And so what they saw is that the prices for these contracts were right about the same. And so they said, it's very simple. You know, you can buy the July and you can help pay for that by selling some of the June.
So here, speaking of catalysts, we're putting up earnings dates. You can see that a ton of banks obviously are coming out to report results in July. And this is what you're talking about, right? The July will be, or has the possibility of being more volatile because there's so much data coming out there.
That's right. So what they're recommending is buying and selling options on financial stocks. And the vehicle that they recommended is a very popular one. It's called the XLF, and it's an exchange-traded fund that tracks 80 different financial companies in the U.S. And they did a breakdown on that XLF, and of all those 80 companies, almost 2/3 of the market value in that ETF are concentrated in a few companies. So and if you look at the top 5, J.P. Morgan and Goldman and Morgan Stanley, the top 5 account for almost half of this. And so they're saying with these earnings dates coming up, this ETF is going to be a big bet for higher volatility, which is going to boost the value of your options contracts if you buy them.
Let me quickly ask you, are there other catalysts that make July so notable for its possible volatility or wiggling? Is it other than earnings? I mean, what else is going on in July?
Well, we got a lot of things, but the thing that prompted this trade was that they were saying that June was really kind of inflated to be almost the same as July because of TARP. But they thought maybe that was a little too inflated because people thought that's already baked in.
All right. Hey, Jeff, thanks so much for joining us. Jeff Kearns there. As I said, again, check out his story on our website at Bloomberg.com.